Hello, everybody. All right, today we're going to be taking a look at Clove's earnings for Q1. They just had Q1 earnings, and it was a pretty good earnings overall. As you can see here, the first quarter net loss in 2023 was 79 million, and this year it's only 23.2 million. Their adjusted EBITDA profitability of 6.8 million versus prior period loss of 37.5 million. So there's a huge upgrade right there. They're improving their guidance instead of being from 1.25 billion to 1.30 billion. Now we're at 1.3 billion to 1.35 billion, and an adjusted EBITDA profitability of 10 million to 30 million, somewhere in between there for the full fiscal year. Also, as you can see here, this is something new for the company. They maintain strong liquidity position. The board of directors authorized a share repurchase program of up to 20 million of the company's Class A common stock over the next 2 years. So they're going to start doing share buybacks, which means they have a lot of understanding of where Clove's going to be in the future, and they think that this is going to be a good decision to use their capital to buy back some of the shares of the company, meaning they are potentially undervalued. But we already know that as Clove shareholders. We've been following this company for a long time. As you can see here, as a second, we have grown revenues in our insurance business about 8% year over year. We already knew we were about 8% for the revenue growth, and it continued to stay in line, so that's good. Another thing we do need to talk about here is the SG&A decreasing by 18% year over year, so their costs are going down. The adjusted SG&A decreasing by 12% year over year. So, that's also a good thing for the company. We would like to see the SG&A decrease even more, because that will cut down costs for them and that will help our profitability going forward without having to worry about the MCR and all that stuff. The MCR, by the way, doing great. We're down to 77.9%. MCR across the board at a lot of companies has been high as hell. CVS stock is hurting from it. Some of the other healthcare companies have been pretty high. As I've seen as high as 91, 92. I've seen some down to like 86, 87. There was a few of them are about 83, 84. So 77% is amazing. I'm not even going to bother calling out other health companies. You can look at those yourself, do your own research. Um, and then, you can see here for the full fiscal year outlook, right here, the previous guidance to the new guidance. We just talked about that earlier. MCR, they're still projecting to be about 79% to 81%, which is a downwards guidance from that 83% right there. So we're doing really, really good. I hope to do see those numbers by the end of the year. The adjusted SG&A, it's still in line with the same guidance, but we do see a difference here. Instead of being 20 million to negative 20 million on the adjusted EBITDA, we are now at 10 million to 30 million positive. So, that's pretty good. So a negative 20 million to a positive 20 million, that's not as great. But a 10 million to 30 million for profitability for the whole year, that's great. We're in the right direction. Those are things that we want to see. As you can see here, lives under Clover management, year over year, it's down to 79,527, which is probably helping us reduce costs and improving the MCR, because as you know, with Clover Health, we're supposed to see an increase in MCR year over year for members. It's the cost of having them as a patient is supposed to go down because our software is supposed to be able to help find and accurately treat patients to prevent worsening illnesses. That's all proof of concept. So far, it's starting to work out. We'll see how Clove continues to do in the future. But so far, it looks like Clove's continuing to improve. They have a new CFO that's starting soon. I think tomorrow, honestly, the 8th. But yeah, I really like where things are going. We'll do a quick little update here. We're going to use the high-end guidance because they like to undershoot themselves. As you can see, it went from 1.25 to 1.30. Now we're at 1.30 to 1.35. So we're going to go ahead and just use the high end to do a calculation here for Clove. So right here, we're doing 5% of that. So we get 6750 with an 8% growth rate. The outstanding shares count I saw was 480 last time I looked, so that's the number we're going to use right now. We're going to use a 10% discount rate to give ourselves a higher margin of safety. This brings us to a discounted cash flow price of $2.77. 40% discount rate, margin of safety from that is $1.50, which would mean we're still undervalued. I mean, as you can see, we're trading at approximately after earnings right now. Still, we're up to 85 cents. I don't know if that's going to stick around. I don't know what's going to happen, after earnings. A lot of times, Clove does a run up and then they come crashing back down. not sure. Well, I'm excited to see what happens. I'm still an investor in Clove. This is a long-term investment for me. I'd like to know what you guys think. As you can see, the 1 year target estimate for analysts is 1.44. That would still mean it's undervalued, and you would make a shit ton of money on the next year if those estimates were to come true. Have a good day. Let me know what you think about earnings.